We are live. Good morning, everybody. Happy Tuesday. Welcome back to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso DePablos with you this morning. What up, chat? We got the full crew back today. Good to see you all. Good to see Arminder and Rachel and Sergio and Dawson and Joe and Per and did I get everyone? I got most of y'all that are there right now. So sweet. What's up, guys? All right, what are we and James? What are we talking about today? Walmart earnings. Got to talk about that. Got to talk about Lowe's. Maybe we'll talk SMCI. Maybe we'll talk about crypto or just the general pullback in stocks and what that means going forward. And biotech, we have an interesting biotech thing we might want to share today. We'll see what happens. Our guest, new guest on the show, new guest alert, everybody, new guest alert. Herb Greenberg is making his debut appearance on the show. Herb runs Herb on the Street, and he'll be on the show at 9 to tell us about. He gave us some tickers to look at today, so we'll talk about that. One of them may or not be hims and hers, and we'll have Kenny Glick on. We'll have Patrick on the show, and that is the plan. So let's do it. Smash the like. Here we go. Oh.
All right, ladies and gentlemen, what is happening?
Where in the world is JC Pretz?
Can you guys hear me all right? We're good?
Where are you, buddy?
I'm in New York, you know. Listen, I was sitting around just listening and observing yesterday, and New York is, I don't know if New York ever left, but man, New York is the way it used to be back in the day. Very impressive.
I mean, yeah.
You know, a little sushi. You know,
you liked it so much. You liked it so much you had to spend the night.
Well, I had to be, you know, I had things yesterday. I have things to do today, you know, got to meet some people. I mean, listen, it's crazy. Like, we talk about seasonality in the market and the way that like humans behave. I got to tell you, like, you know, regular business, like that, like September, October, November before the holidays, like people are not messing around. Like people are trying to get deals done. It's fascinating. And it's probably going to die down over the next couple of months and then pick up again in January, February. Humans are a wild bunch, Strazza.
So we were talking about you yesterday. Alfonso said, why is JC always in the city? I said, listen, and what I told him is, it's your happy place. Everybody has their happy place. Manhattan is yours. Am I wrong? That's really your happy place. When you're there, you light up.
No, I do New York well. New York treats me well. So, I mean, you know, you've hung out in New York with me. You know, it's a good time.
I've been there. Yep. All right. Well, we missed you yesterday. We were talking about a big theme. I think I was pretty obnoxious about it, right, Spencer? We pretty much spent the whole show talking about one theme, which is more or less rotation out of large cap tech, maybe a loss of leadership in large cap tech. I know you've been on this theme too. I read your post from the other day. I think we have the overlay chart right here on the deck if you want to throw it up, Fonz. But I think we're seeing the same thing. Did you see this like reversal pattern, all the reversal patterns in the speculative tech indexes versus the big cap or the large cap growth indexes? It's all kind of coming together at the same time.
I've got some thoughts. Why don't we do a little state of the markets and dive into it, Mr. Spencer?
Sure.
All right, guys, we've got the market down this morning, 265 points on the Dow futures to the downside, 43,300, just under that. S&P 500 futures just under 5,900, also down 0.5%. NASDAQ 100 down 100 points, almost 0.5%. Then bonds are ripping this morning as yields are coming off, and that is something that I want to talk about today. We've got crude oil flat on the day, just above 69. Copper down a smidge, 411. Gold up a full percent, 2640. Silver up 0.5%, 31 and change, with the volatility index pushing 17 once again. Bitcoin, however, ripping 92,000. Up another 1,400 points this morning. That's 1.5%. Ethereum down 3%, 3,100. Solana 242, up a full percent this morning. Binance 616. Total crypto market cap, Mr. Spencer Israel, 3.02 trillion. That is a new all-time high with Bitcoin dominance still above 60%. How do we feel about that?
Feeling pretty good. Not only do you have the prices going up, you have deal activity, you have M&A, or at least rumors of M&A, and that's always fun. And it means, as Steve would say, the animal spirits are alive and well in crypto.
Bring on Steve. Mr. Strazza, are you impressed by the resiliency in the stock market despite rising yields and rising dollars?
Yes.
Do you think that the underperformance of technology is due to that? And with the dollar and rates at the upper end of their ranges, if dollars and rates were to roll over here, should we expect that rotation back into technology? These are the things that I'm thinking about that I wanted to kind of express to you and hear your thoughts.
I don't think so, and I'll tell you why. Because tech stocks started showing this weakness, at least on relative terms, in July.
Yeah.
Talking about it back in July. They were having some of their worst days, worst weeks. We were getting blowout readings on the short-term rate of changes on relative terms. Money coming out of tech. At that point, interest rates were falling.
Yeah.
You can see, right? This was the little leg down that led into the current leg up. Right?
Yes.
And they were underperforming massively. It's just continued. So I don't really know what the reason is, JC. Maybe it's because these indexes that we're talking about are dominated by stocks that are up 3, 4, 5x already this cycle. So profit taking there, I don't think is crazy. But we're seeing it in the charts, and we're basically seeing the same patterns that we've been buying this whole cycle now on relative terms break out that are not favoring the old leaders, large cap tech.
So you don't think that we see rotation back into technology this year? That's it. Technology underperformance is here to stay?
For now. I think the charts are very clear. Throw up my initiation chart. And this one's really obnoxious and scary, and everyone's reading it the wrong way. This just means loss of leadership for tech. That's it. Just stop right there. Right? I know what happened last time we were up here. I get that. But this isn't like a bear market call. This is just the winners so far this cycle probably won't be the winners as this cycle, progresses.
Do you think it's a coincidence that on a relative basis, technology started its underperformance at the exact same levels that it started the underperformance in March of 2000? Like, do you really think that's a coincidence?
You know that I don't think that's a coincidence. Polarity is real. Even in this case, polarity, Jason, from 22 years ago. But we've been up here, right, trying to break through this level for a while now.
Almost 25 years ago, my friend. Almost 25 years ago now.
Oh, yeah, that was 2000, not 02. I'm usually comparing it to the readings at the lows. So yes, you're right. 25 years.
It's about to be 25-year anniversary of the top of the dot-com bubble, and technology has been outperforming for quite some time until it got back to those levels, which it did earlier this year, and the underperformance has been there, and the underperformance out of small caps started 18 months ago.
And you know what else is there at this level? First of all, let's just be
small cap tech specifically.
There's sentiment that I think is worth talking about. But first, hold on, go back real quick. I just want to explain what we're talking about in this chart. We didn't even explain the lower pane. This is huge. This isn't a 1-day rate of change. This isn't a 5-day rate of change. We already got extreme readings there in tech on a relative basis, starting back in July, again in August, again in September, right? This is 21 day. This is a 1-month rolling rate of change. So you're out, you've moved pretty much out of the short-term rate of change readings now to intermediate term. That's just confirmation. It's like new highs. You want to see the percent new 10-day highs and the 21-day highs and the 60. It moved out, right? So this is really big confirmation that I think this is a new initiation type momentum, new initiation downtrend reading in terms of the momentum here, and that a new downtrend is underway. These stocks also have outperformed for like so long, so long that people can't believe that they would ever stop outperforming. And I think from a sentiment standpoint, oh God, is that good? JC, you know what's awesome as a technician? When you show somebody the same pattern, right? And they like it one time for one thing, but then you show them the same pattern. Go to the ARC QQQ. This is the same thing. And I'm showing it to the same people. They hate this one. Oh, that's good. Like this is objective. Spencer, I want to talk to you about this. Yesterday, Spencer was giving me lip about it. I don't make the rules. This is a new uptrend. This is a trend reversal. I don't know what to tell you. You don't like speculative tech stocks? Sorry. People liked them in 2020. They loved them in 2017.
I don't know if I was giving you a lip. I was saying you got a lot of overhead supply up there as well. That's what I was saying.
Spencer, were you giving him lip?
I don't think I was.
Just
listen, stop giving people lip. Throw up the new slide too. This is a good one. I want to hear your thoughts on this one because I mean this one really stands out to me. I mean, it seems quite obvious what's happening here.
And this is semiconductors, not software, too, by the way. The software still looks pretty good. We can get into that, too.
How do we feel about this?
Which is great. This is
it great? Great for who?
Mega cap tech investors use this. Also, I just think from the index perspective, let's talk about index investing and passive investing quickly while you have this chart up. An environment where we're seeing small caps kind of take the lead, where we're seeing the speculative growth stocks or the ARKY stuff do better than the mega caps. This is bad time for passive investors. You should expect the major averages to underperform. They don't just outperform every year forever and ever and ever, right? Like they go through periods of underperformance, and I think we're going there. So if you're in the NASDAQ 100, consider just being in the best ones instead. It's going to be more and more of a stock picker's market, and passive investors are going to underperform.
Wait, aren't the indexes always going to underperform the best holdings in the index?
Yes, Spencer. But there's times there's times when the indexes will outperform most stocks in the index, which has been the case.
Fine. That was lip.
All right. Can you gentlemen tell me why are we ignoring this? Number one, why is nobody talking about this? Number one. Number two, how bullish do you think it will be for equities if this actually breaks out above those former highs and actually starts to take off? That's only going to happen if we get rotation back into technology. And I'm not saying it's out of the question. I don't know why you're just dismissing it like it's not going to happen.
I showed you why I'm just dismissing it. This is just evidence. These are facts, JC. We're talking about facts here.
So that's it. We've seen the highs for the NASDAQ for the next several quarters.
Oh, stop it. Stop. Hey, stop that. I'm talking about relative trends. So the NASDAQ will keep on, grinding its way higher.
That's what I'm asking you. You think it actually will? Because I don't think it's going to grind its way higher unless we get rotation into technology. I think it's stuck under this until that happens.
I think it would grind its way higher without being a market leader. Absolutely. And past periods where the speculative stuff is outperforming the large cap stuff, they're both rising, right? I'm talking about, so when you had big trend reversals and then, new up legs or reaction rallies from the speculative large cap growth ratios, that happened in some of the best bull markets. This was 2017 characteristic. This was 2020 characteristic. So it's not that the NASDAQ 100 is going to stop working. You're just going to wish that you owned the shittiest tech stocks instead of the best ones for a change. Your buy now, pay laters are going to be trending a hell of a lot better than your semiconductor equipment manufacturers.
These large cap tech stocks don't look terrible.
No, they don't, because nothing looks terrible in this market. The truth of the matter is that a lot of these tech groups have given back all of their gains since the election. Compare that to the price action, something like financials or Bitcoin, or even some of these ARK funds. High and tight, baby.
And what about the percentage of stocks above their 200-day moving average? That's not a problem? No problem?
I'm okay with it. I look at it at extremes, and it's not.
So you don't think that the lack of confirmation, it's okay? It's that it hasn't confirmed yet? It's not that the lack of confirmation is the problem. It's more so it just hasn't confirmed yet because it's hard to get more than 70% of stocks in uptrends. That's just a huge number. So is it like a law of large numbers situation?
Let me tell you something about this breadth indicator and all the other ones. All the other ones. In bull markets, I'm not sitting around and waiting for confirmation from any of these breadth indicators. I get my
so you don't think it's bullish that we just saw the most amount of new 52-week highs on the New York Stock Exchange in 3 years?
It's great. I think it's great. It's confirmation that's a bull market, but the breadth thrust already told us that.
Okay, but now that you're getting another one, there's a period of deterioration before the overall market peaks, and fact that we just got the most new highs in 3 years, we haven't even started that deterioration process yet.
I'm looking more at these fresh bases. You know what I think some of the most bearish action from last week was? Biotech's falling apart, because I think you need this new participation, these new rounding bottom patterns, right? I would call them late leaders, right? Because they're going to become market leaders, but they haven't been up until now. these late leader bases, they have to break out. They have to stick these landings. The price action in biotech falling back into the box, undoing the primary trend reversal. We don't want to see that. I'm less concerned about something like the NASDAQ 100, which has already gone to the moon this cycle, pulling back and seeing some corrective action. I want to see those new trend reversals complete in a decisive manner, because that speaks to that broadening participation, like you're saying, JC, and confirms that we're nowhere near the fall day, right? In fact, a lot of stocks, I think we can argue now, speaking of speculative growth, speaking of small caps, speaking of regional banks, they're in brand new uptrends. Some are late, but others
I love the fact that you were tweeting out yesterday how space stocks are mooning.
They are.
Yeah, I thought that was a very 2024 comment there.
Dude, we're going back to that place. Did you read my post from last week? Like, I really believe this. I think Roaring Kitty tweets this week. I think GameStop goes 5x. I think people start buying Teladoc and Peloton.
Are we really going back to the old Roaring Kitty indicator? Is that what's happening here?
100%. People are going to be, retail traders are going to be quoted in the Wall Street Journal every weekend. Like, we're going back.
But is this is Mr. Kitty is he active again or no?
No, but it's coming. Because he's not stupid. This is his moment. This is his time. He comes out, he puts out one tweet. GameStop's up 100% in this kind of market. He's not stupid. Like, why not? He did it last time. So I don't see, that seems to be his playbook now, right? So I don't know. And I don't even think
accumulate and then start tweeting.
So he did last time. And it worked beautifully. Right? If you were in May, we were in May. So
you think this base completes up, we get back into the 60s or more?
I think go do yourself a favor. After you watch our show, go and chart just a handful of altcoins. Make sure you look at a bunch of these meme coins. Look at the Floki, look at the Sheeb, look at the Doge, right? Look at all these memers.
Look at the Floki. Did you just say look at the Floki?
Oh my God, the setups so high and tight in these things. They're about to explode. No one even talks about NFTs anymore. Hedera Hashgraph was up like 100% over the weekend. Like, the junkiest coins are starting to moon again. It's been a long time since we've been in this place. Like, when I say the animals,
does it surprise you? Does it surprise you that GameStop has less than 10% short interest?
Yeah, you don't even need it, dude. These meme stocks, like, they trade like they have short interest. Like, sure, you're not going to get the same magnitude of a move. I don't think ever. You're never going to see 2020 again. That was stupid.
Steve Strazza is the new kitty. I agree. He is a cat lady. I don't know if you guys know, but Strazza is a real life cat lady. How many cats you got, bro?
2 cats. I got 2. Yeah.
I think you have more.
No, 2 cats. 2 cats. But yeah, I love my cats. And I'm not Roaring Kitty, dude. I'm just here to ride the wave. I'm just here to ride the wave.
Steve Strazza is Satoshi, not Roaring Kitty.
I'm not him either. But
I really wish you were. How much cooler would it be if you were Satoshi?
I wouldn't be here.
That'd be pretty awesome.
But no, I think we're going back to the metaverse. Is I guess what I'm saying.
Going back to the metaverse. All right.
Going to the moon. We're going to the metaverse. Everybody should be making money out here.
I'm into it. All right, and then so. Talking to Nikki Montana yesterday in a very Steve Strazza happy hour sort of situation, some of your favorite cuisines. And so I don't know how much I'm allowed to say about this. I think it's probably whatever. I'll leave it at, there are some very influential crypto folks who are invested in Spot.dog. And there's going to be an iOS app very soon. And there's going to be, I don't know how much I'm allowed to say. Let's just say that there's a lot of exciting things happening, making it a lot easier for investors to be able to trade any cryptos. They're leading essentially with the meme tokens. And then here's something really interesting, Strazza. Like Coinbase originally made it easier for people to transact on chain, right? Like that was the original kind of like centralized exchange for crypto, although limited. And that's what put Coinbase on the map. Then Binance was the first one to bring in these altcoins and some of these more exotic tokens. So that's what drove interest into Binance, and that's what grew Binance.
No standards over there,
No standards over there. And now Spot.dog takes the entire Web3 aspect completely out of the equation. So people who don't want to worry about the blockchain and moving money from here to there, they just want to trade these tokens. That's what Spot.dog is. It just eliminates all the headaches of Web3. It's kind of just the bridge. It's still your wallet. You still have your tokens, but they handle everything for you. Pretty freaking awesome, man. So I'm really, really excited. So I want to share that. There'll be more news coming. We'll have them on the show. You can talk about it. But let's just say there's some heavy hitters that are investors in this company.
Well, it's all about convenience, right? It's convenience and then safetyhood or confidence, right? So you want your customers to have confidence that their money is safe. That's very important if you're going to get accounts with any significant size. And Coinbase has done that. And convenience, like, is there a better app than Coinbase? Finance.
Yeah, Spot.dog is now going to be much better. Yeah, because Coinbase is, you're still, even though it's centralized, there's still some headaches and things that you need to do on Coinbase that you're no longer going to need to do in the new app.
It's great. There is an opportunity in the market for just going far below Coinbase's line, right? Because I can't tell you how often I'm looking at Coinbase, even today with the Floki. How often today I'm like, I can't buy this on Coinbase. I got to go to Binance. I don't want to do the futures and the advanced stuff. I don't want to do that anyway. So I think there's market opportunity there, but to try to be the next Coinbase is not what you.
They don't need to be the next Coinbase. They don't need to be the next Coinbase.
Yeah. I mean, you could be a quarter of a Robinhood and be decent.
I'm saying, right? A lot of money there.
Donald Trump investing in the cryptos, or I'm hearing maybe rumors of investing in the cryptos. I read a Wall Street Journal article the other day about Donald Trump Jr. being laser-eyed. Have you heard this, Spencer?
This was a report that came out at like 3:20 yesterday, 3:10 yesterday afternoon, so before the close, that Truth Social is looking into buying Bakkt, which I have to admit I forgot was public.
Because he's not a Bitcoin maxi now, right? He's like an equal opportunist because he likes the Doge a lot. So he's not, right? What's Bakkt?
It's an exchange.
Okay. Yeah, I think I think they're going to be buying for the U.S. government, aren't they? Isn't that done?
No? Stop that. Come on, don't say that.
Don't say that. Isn't that like a thing? I swear. Are they not doing that? Are they not doing
No, they for sure talked about it. Yeah, the strategic Bitcoin reserve. Yeah,
they're floating the idea.
Talked about it. You don't think they're going to do that?
No, I'm willing to bet money that they're not going to do that.
Stop it. You're going to bet money? I'll make that bet with you.
Yeah. The whole presidential term, Bitcoin won't be bought. Sorry.
All right. The whole presidential term, no Bitcoin will be bought. I'll take the other side of that. We'll do omakase at 69 Leonard.
Great, because
you're buying it.
Because think about it.
And the stock is expensive there. I'm just telling you.
But stop. This is common sense. Okay. What makes the United States the world superpower at the end of the day? Is there one thing?
Yeah, we own all the tech companies.
No. Okay. So economy. So you're saying economy?
I don't know about all that, but
it's the dollar. Okay, it's the dollar. Every important transaction in the world forever is denominated in U.S. dollars.
Hold on, before we bring in our guests, because we got Kenny's coming in the show. Spencer.
Kenny is. Yesterday he was sick. Today he's going to the city.
All right, we'll hop right in. We'll hop right into her. But yeah, Strazza, officially, we're making the bet that U.S. government will own Bitcoin before the end of this term.
Okay, stop.
Oh, that's not much of a bet.
So
he's saying no. I think it's a no-brainer.
4 years.
Dude. The U.S. government isn't going to undermine the thing that makes them the world superpower.
So do we have a bet in front of everybody? We have a bet?
We want crypto to be done in the United States. We definitely
see how he's avoiding? He's avoiding the question. Do we have a bet?
Dude, I can't.
Do we have a bet?
Get Kenny on. Yeah. I got to go finish eating. All right.
Well, Kenny's not here.
Kenny's not here. We're bringing in Herb Greenberg.
But we have Herb.
I think he's like, I don't think he's agreeing to this bet. Are you scared?
No, I'm not scared. You sound crazy. Again.
I'm the crazy one.
Oh my God. Oh my God.
I do wonder what the Vegas odds would be on this because
Spencer, just think about it.
Okay.
Dude, you're so wrong. Take the other side. All right, bring in Herb. Is he ready?
Yeah, Herb's here.
All right, bring him in.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
All right, Mr. Herb Greenberg. How are you,
Hello.
sir?
I'm doing okay. I'm getting over the jet lag, but I actually am out of the fog right now. There's some stuff that happened today to get me going a little earlier than usual. There's a company I have written on called AeroVironment, AVAV, and they just announced a deal, a huge deal that I mean, I think it's a deal out of weakness. This is a company that makes drones, and I've written questioned about, maybe they're in the wrong drone space, but there's so much going on today, and so many of the names oh my goodness,
What's the ticker
that I've
symbol,
been
Herb?
writing about.
What's the ticker symbol for that?
AVAV, $4 billion deal.
Oh yeah,
They're gonna,
sure.
yeah. So it's the kind of thing that I think a lot of your people would have probably looked at some point in time, especially the Ukraine war. But once Ukraine came in and started using other types of drones, and questioned whether these really expensive drones that AVAV made were really were really all they were cracked up to be. So I red flagged it a while back, and I'm just looking. There's some news this morning. Sorry to come in hot like this, but I'm just getting stuff. There's some news this morning on Centrus Energy that the Russian government, from what I am just now hearing, that's LEU. That's another one that I'm it's a nuclear. They are an enricher of uranium. That I'm just hearing that the Russian government is banning the export of uranium to the U.S. So that would be sort of tough for Centrus. So we have a lot of things going on with a lot of different companies that are sort of when I say my wheelhouse, when I red flag these companies, it's not like they're coverage, like some coverage universe. They're companies I watch. And when I red flag something, JC, I basically red flag them because these are stocks that you may want to consider avoiding just because there's potential risk. And sometimes I put these things on there, and lo and behold, I look at you and I look at what you're doing, and they're on one of your lists to go much higher. And I go, so what do we do here? Anyway, so that's my morning so far. And it's only not even 6 o'clock in San Diego.
I love it. Well, I'm glad to see you're back. You went on a nice little trip around the world, so good for you. Welcome back. Markets are moving. Never a dull day in the market, Mr. Herb Greenberg. Let me ask you this. I know you've got, first of all, I love the red flags that you're putting out. And I was literally going to ask you if you can explain what that is. But I mean,
Sure.
you did a nice job of that. I love that, Herb. Like, seriously, whether we agree on something or not is not the point. The point is, like, you're highlighting a potential situation. That's good enough for me. I'll go take a look,
This is the markets, right? This is the markets. It's not some, holy religious war. These are stocks. These are companies. People get emotional about them. But what I have come to realize in my many years of doing this is people do get so emotional, but they understand. A lot of people come into the market, especially if they're newbies, and the first thing they want to do is the first question they ask is, how much money can I make? And the sophisticated guys, they're often, first thing they're doing is, how much money can I lose? And they're trying to understand that and weigh one against the other. And it depends on duration, of course. Some people are more short-term in their trading. They're traders, like some of the people who might be following you, and other people are investors or longer term, and they are going to ride through the various waves of it. And so when I look at something, I think the concept of red flags or stocks to avoid is often missed by so many, especially people who come in the market the past 2, 3, 4 years, because they don't understand the concept. I mean, it goes back to what Warren Buffett said, right? When Warren Buffett's rule number 1, don't lose money. Rule number 2, don't forget rule number 1. It's basic, it's easy, it's a basic concept, but it's easier said than done when everyone around you is loading into this, piling into the same stocks because they're what's working now. And, that works until it doesn't.
All right. Talk to me about HIMS. We're looking at a $4 billion company. This, it's technically a consumer staple. I don't know how you feel about that. So tell me why this company's going to zero.
Well, I didn't say it was going to zero. What I said was, and it's interesting. This is a company. I went back and I've been playing around with StockTwits again. And then our friend Howard Lindson's StockTwits. And I realized after a while, that's why I wasn't dealing with StockTwits for a while, because companies like this bring out the trolls. Now, when the trolls come out, when I write something red flagging it, I have something I call and I've used it for years. It's called the hostile reactometer. I created the hostile reactometer. It's in my brain. It's in my head. And it's one of those things where the hostile reactometer starts really spinning out of control when you write something that a group of people just don't agree with. They're not.
I'm so with you, Herb. It's so good. It's so good of you to recognize that. I would encourage, if you're listening out there, listen to what he's saying. And not everybody has the type of following that you and I have where we're going to get enough engagement to be able to recognize that. So there's that also. But in our unique circumstances, the fact that we can recognize that, because if everybody thinks you're crazy, Herb, you're probably onto something.
You're onto something. It can take a while because
Yeah.
these things have minds of their own. And people forget this is what makes markets. Bulls and bears, you want bulls and bears. You want short sellers. And there are fewer short sellers than there used to be. You want short sellers because you want natural buyers if something were to go against you. You want people who are going to be there cushioning the fall. Otherwise, it's the old, elevator up or escalator up and elevator shaft down. And that's what happens with some of these. Now you asked about HIMS. The issue with HIMS, I first wrote about HIMS when the stock was about where it is now. And now that was the day my first big red flag came out. I actually priced it just because when I say what was the price, it was really 16, not 20, because the day before I wrote it, it was 16. I put it out that morning before the market opened. So just for, credibility's sake, just pure transparency, I price it from the day before. So in any event, HIMS is just an issue where there's so much going on, and you have, potential. You have a lot of competition. You have the FDA basically really shining a spotlight on this company. We should get more information on that later this week. And you have the real question of, is their base business, their non-weight loss business, is the growth of that decelerating? And it appeared, depending on how you back into the numbers, that appears to be decelerating. The company doesn't give you the right metrics. They've actually started reducing the disclosure, which is potential red flag on some of those metrics. And when it comes to the weight loss business, there is an issue about compounding and compounders of some of these drugs and how that is going to evolve in the marketplace. And so I think HIMS is a great story stock. I think it remains to be seen if the growth that it currently has can continue, especially in the weight loss space, especially when you have Lilly and Novo Nordisk really pushing hard back and some various issues surrounding that. Anyway, look, I think there are potential issues here. This week will be an interesting week for the company, but I noticed when I was looking at it, I was going back in All-Star charts, and I noticed you had something there where you actually saw this. I think you said at 25.50, the stock was going to go much higher. There are people out there on these message boards who are saying, hey, this thing's going to 45, this thing's going to 60. I don't know how they know that. And I get very dubious because it reminds me of the old days of stock message boards way, 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 way back, where there are always people telling you where something's going to go, but they're not telling you why it's going to go there. And so, I have.
Well, I'll be the first one that tells you I don't know where things are going to go, and I definitely don't know why they're going there. But I will tell you this: if HIMS is above 25 and you're short, I think you're crazy. Like, not you specifically, just like the general, the youths, right? If you're short HIMS and it's above 25, I think you're nuts. So
but
it's
it was
more of a
above
risk
25.
versus reward. We're below that right now, by the way.
But it was above 25. It did go to 30, and then it came down with a thud on bad news. This stock in particular can move very quickly on just the change in the wind. And so what happens in that kind of a situation? When you see it, when you see it going above 25, and yes, it went to 30, and then it comes down. So how do the charts? What does that say about the charts? The charts gave you a trade, but what do they say about the long-term impact of the company?
Well, I wish that charts said things to me. I always envision what a chart might say to me. Some might say different things, The way I look at this is that I look at this as a multi-year base. I look at the relative strength in the garbage that is Eli Lilly and Novo Nordisk that are getting hammered, and this one's still pushing up against highs. This one was a nice whipsaw. This is a classic whipsaw, broke out and failed. So now we're back below those levels. The only way for traders to avoid whipsaws is to stop trading altogether, right? This is part of the game. So if the level's 25, which in this case, in my opinion, that's a good level. If we're not above 25, there's no trade. There's no long position here. I'm with Herb. Avoid it altogether. You know, short it if you want, right? I'm not short it, but
By the way,
right?
JC, famous last words, by the way. Famous last words. No, I'm with Herb. Famous last words.
Yeah, but dude, you know, we break each other's balls and everything, but at the end of the day, I agree with you a lot on a lot of things.
Well, look, I have this list, and what's interesting is if I look at my red flag list, which I started in May of 2023, and you know, it's based on a variety of, you know, I get the ideas a variety of different ways, some from screens, some from friends I talk to, and it has 30 names on it right now. And again, it's not a coverage list. It's a way, I almost look at this as a list that you can tell how the market is really doing. Where are the excesses? That's what it's sort of become to me. And it's never turned positive, meaning the average return on these have always been negative since I started and continue to be negative. A week ago there, it was a negative 21%. Obviously there's one that went to zero. There's some that are up 40%. There are one up 40% or something like that. But most of them are still in the negatives because these are stocks that have risk. They have undue risk and they get caught up at some moment, they become a story stock. And then reality hits.
Herb, I have an unhealthy obsession with the type of work that you do. I absolutely am such a firm believer that people like you are absolutely necessary in this market. The ability to identify overvalued situations, potentially fraudulent situations. I mean, that is such a huge value add. And I say this with all the respect in the world.
Yeah.
If you hate something, all that means is I'm gonna take a closer look. Not only may I not short it, I might actually buy it, right? Like, so it's not like, oh my God, Herb hates this stock, so we have to stay away. No, you might be early, right? Or just completely wrong. But I'm gonna take a closer look because there's something there. Because not only could the shorts be right, and that provides opportunities, but in my experience over many years, when the shorts are wrong, that is also a great opportunity. So I'll be open-minded to take both sides. So your work adds a ton of value to our process.
Thank you. And I think, look, the shorts are sometimes wrong. They could be wrong at that point in time. And again, stocks evolve over time. The stories evolve over time. But the thing I've learned when I was doing research that hedge funds subscribe to, that were really at the high end, short bias research, it would be just what you said. Someone would come to me and thank me because I kept them, when I say our research, my firm's research kept them from buying more, or in some cases caused them to reassess the company, double up on their research, rethink and realize we might be wrong. And that gave them greater comfort because, you know, the other thing is people get very complacent. And so good stocks that have been working for a long time can sit on a shelf gathering dust. And now you've caused them to take it off the shelf, reassess it. Sometimes they say, oh my, there's an issue here. And I think I would say the problem with the message boards, the negative part that I would tell people they need to just be aware of is, again, it's crowd psychology. It doesn't mean that the crowd is wrong, but it means that they're going to shout down the person who's raising the red flag. All you need to do is go back and point out, hey, I believe this person's wrong. It's not a holy jihad. We agree to disagree, and we'll see how things evolve. And that's how I sometimes get more subscribers because I was right on something, or people unsubscribe because I was wrong on something. That's the nature of the beast in the markets. Nobody always gets it right. Nobody always gets it wrong. Everybody's making it up as they go along, which is my favorite line, because nobody can see the future. You just can assess the future based on what you have to go on at that point in time, unless you're insider.
And we know that asset prices trend, Herb. We know. So there's a market anomaly there to take advantage of. And if you can recognize those market trends, you're going to be at a greater advantage versus those who ignore them.
Yeah. I wonder how it'd be to overlay what you do with what I do. And I wonder what the outcome would be, because
we're going to do that, Herb. That's a phone call for later today, but we're doing that. We talked about it in San Diego. We've done it over the phone multiple times already. we're doing it. It's a done deal.
You know,
We'll
it's
make it
interesting, and by the way, it's interesting. You know, you and I talked just a short while ago. I think it was about 3 months ago. I had done this piece on Erie indemnity, and you pulled up the chart and you said, "Herb, this thing's going to roll over." Now, this is an interesting. This is very interesting. I think the stock was 500 then. I don't remember where it was. They got added. This company nobody's ever heard of got added to the S&P 500. Stock continued to lift. I think it went to 550. I don't have it in front of me. And then it just collapsed. And that's the thing that you have to always keep in the back of your mind, that type of a situation.
Yeah. You know, because you could lay out the catalyst, right? But then the price behavior is going to dictate our actions always. But if you're bringing me an idea from the short side, I'm going to have like a short bias. Granted, still open-minded, might even buy it, but I'm going to come at it with a short bias and I'll say, okay, if Herb's right, if this stock breaks these levels, we're going to short the crap out of it.
Just know it. And by the way, I'm looking at the feed. This is a great feed you have with the show. And some guy comes on and he goes, "This Hims Bear doesn't know shit." I mean, that's the mentality. I look at that and go, "Whoop." The hostile reactivator.
You're on to something, Herb.
You know,
you're on
let me just, and I know you got to go. I just want to say, Andre Vasquez, shout out to you. You're the guy who says, I know no shit. You know what? Maybe I don't know shit, but I would just say you should recognize the risk that is inherent in this situation. You may be right, but I'm telling you, there's broader risk there. Lots of smart people taking a very close look at it. And I would just, if I were you, learn to respect that. You don't have to be so hostile in the way you talk about it.
I love how Herb, first of all, Herb Greenberg has given Yahoo message boards multiple shout outs in this interview. So that in and of itself is a unique circumstance. Number one. Number two, Herb is trying to rationalize with humans on the internet. Also pretty hilarious there.
Notice the color of my hair. Notice the color of my hair. It's only getting whiter the longer I do this.
No, bullshit, man. You look great. If I want to look like you. I want to look like you now, actually. You know, you look great, dude.
Thank you.
Yeah, Mackey's aging pretty well too.
Mackey's a lot younger than I am, so he can age gracefully.
Is it the San Diego thing? You guys are just aging so well. I'm getting older over here. You guys are like Benjamin Button over there.
Well, you're in the East Coast. The West Coast is so much better. We know that. You used to live here.
All right, Herb, before you run, give us one more tidbit.
One more tidbit. Let's see. What am I looking at here? Vital Farms is another one of mine. GFL is an interesting one. That's a Canadian garbage company. It's one I've written about quite a bit. The stock is like Teflon. It is so much like Teflon. It's a fascinating story because there's a lot of dynamics here, including some gunshots that have been fired at the executives' homes, two of the top executives' homes. There's talk about, you know, there's been chatter about a bunch of things, but this company has been a company where there has been lots of leaks about potential sales, first of the company, and then about the sale of a unit, which is now sort of investors are hanging on. Anyway, it's an interesting situation. Fourth largest waste hauler in North America, but man, it's a Teflon stock, and it's one that look, if there are a lot of people gunning against it just because a lot under the surface raises red flags, you know, in terms of the quality of the numbers, the quality of the earnings. But you know what? It's a Canadian company, and Canadian pension funds will support their companies until they can't any longer. And whenever I see someone who's short a stock like this, and I've talked to certainly shorts about it, I've written red flags about it, I always say, what about the Canadian pension funds? Because that is a risk to somebody who is betting against a Canadian company, because they are often big holders who will hang in there.
And this is another great example. Like if I'm bearish GFL, right, and I agree with Herb and say, okay, this thing's going to fall, I'm only going to be short if we're below those prior cycle highs. Because if we're above that and you're short, I think you're crazy, right? Like, this is one of those. This is one of those like very clean lines where Herb's like, "Hey, red flag," but the setup is so clean. Love this.
You say the setup is clean for what?
Either way, if you're looking to short it, if we're back below those former highs, you can short the crap out of it. But if we're above that, I would not do that.
they've got a window of several months because they've told investors that they expect to have a sale of this one unit, their environmental services unit, it used to be by the end of the year. It's now by February. They keep pushing the date out, but investors are going to continue to hold on to it there unless there is some other sort of unsavory news. I always talk about this one as being a company with a lot of drama and dysfunction. That's what I've written. And by the way, someone named Dawson wants to know if I can clarify my AVAV comments.
Yeah, I
and
was
the
going to
answer
ask you.
is,
Yep.
yeah, the answer is I can't, because literally right before I came on, I saw this news. I started going back and forth with some friends who are engaged in it. I think it is, when I say it is a move out of weakness, I think they're genuinely is a company which, while it really started the whole drone and the military drone sort of movement, its products are very expensive. You know, when Ukraine started and Russia started using products, both sides found they could buy products from China, basically, or even create their own and jerry-rig them, you know, for very little money. And that sort of left a lot of these companies potentially, these drones from AVAV, as expensive, you know, toys that are piling up possibly in warehouses in Ukraine. So the real question is, what does this deal mean? I can't tell you, but I think today, by the end of today, we'll get a lot more clarity on it. It's, again, $4 billion deal. It's out of left field. I don't know anything about the company they're buying. It's a private company. So I just saw it and just knew I needed to mention it. Lots going on today. Today is a busy day in my world, and which is good because it keeps the
Herb, we're gonna get you back on. This is fantastic. Like I said, I'm not just telling you this because if I thought that your work added no value, I probably would tell you that. But I really do appreciate the type of work that you do. Even some of your short ideas, I like them. I might like them long, right? And then, but from a short catalyst, I'm always looking for shorts. Always looking for shorts. I ask Twitter, follow my Twitter feed. How often am I asking people for the best short idea?
By the way,
time.
I want to stress, I don't call my ideas short ideas. I want to make that exceedingly clear. I call my red flags, stocks to avoid. You can interpret it any way you want to interpret it. If you find them a good short, good for you. If you want to bet against them using options or whatever, good for you. If you just want to avoid them, because in today's environment, arguably the best way to short a stock is just not to own it. So given the way the dynamics of the market and market structure, because the changed market structure has changed the dynamics of shorting. Many people will tell you, by the way, I still know plenty of people, and I've said this early on when we started our conversation today, I know plenty of people who short stock. You know, they may be an endangered species, but they've been an endangered species for quite a while, and they're still out there, and they're some of the smartest folks.
They are some of the smartest folks, and they are a necessary part of this market. The good ones and the bad ones, the ones that are correct and the ones that are getting squeezed. Like, you know, I mean, it's a beautiful thing. I love everything about it, Herb.
Hey, JC, it's always great seeing you.
For sure. Thank you for coming. We'll do this again. I'll call you.
Take care. Yeah, take care.
All right. Adios. Ladies and gentlemen, Mr. Herb Greenberg. Come on. How great was that?
That was awesome. I like how he came in firing with like almost breaking news. Like he was like,
he's all business.
This just happened.
Yeah, he's all business. You know who else is like that? Tom Lee's like that. Whenever I run into Tom Lee, he's like, "Hey, JC, so what do you think about the market?" I'm like, "Hi, good to see you. How are things? You know, congratulations on the marriage." Da da da. Yeah. So what do you think about rates here?
There's no time for that. There's no time for pleasantries. We don't have time.
I mean, I like appreciate it. I gotta laugh at it. You know, like it's so great. People who love this shit because, you know, game recognized game. Like I love this shit too. You know, like it's fantastic. All right, listen, I'm gonna hop, guys. Strazza, try not to get us canceled. I gotta take care of some things. You know.
Enjoy. I'll see you later, I guess.
Adios.
JC, Steve, can we talk about Walmart here? I know you have things on your list, but we got to talk about Walmart.
For sure. First, I feel bad. I got to join the Herb interview next time because there's so many thoughts on pretty much all the names he talked about. I think the most important thing that he said in that whole talk was sometimes the best way to short a stock is to just not own it.
That's it.
Be mindful of the game you're trying to play when you're looking for naughty companies, right? And looking for shorts in the middle of a bull market. These theses are often so true and everything's spot on.
Doesn't matter.
the bads of the company, and they're ripping anyway, and they got a 20% short interest, so they're really ripping, and your face is getting ripped off. So it's a tough game to play. Company like Hims sitting here near new all-time highs with a 20% short interest. That's a bomb waiting to go off, right? And it doesn't matter if they stopped reporting on the weight loss drugs right now. In this kind of market, GameStop is going up every day. So I just messaged our friend Braden over at FinChat. He does a lot of work on companies that reduce disclosures. It's a thing. When they when they stop reporting information that they used to report, it's one of the best leading indicators that the fundamentals are deteriorating, right? Before it even happens.
Are we talking like filings or press releases or both?
We're talking about typically in the press releases, right? Okay. So in the 10Qs and the 10Ks, but also in the press releases where they often give a lot of color. If there's a product line that's growing, a bunch, they're going to give extra color on it. They want investors to know how well it's doing. And then when that product line maybe peaks out and stops growing as much, they reduce those disclosures because they don't have to give them, right? So they take those disclosures away and they give you less transparency into those numbers because they're not good anymore. So if Hims is doing that around the GLP-1s, that's super interesting. Braden's going to look at it. He does all this work around companies that reduce disclosures. I think it's great. I also will say Hims is just a company that I can't bet against at this point. They were selling anti-anxiety and depression medicine during the pandemic, saw tremendous growth from that. Then they saw tremendous growth selling boner pills. Somebody just mentioned the commercials. They're insane, right? They're all over the place. So these drugs have become a tremendous growth driver for them. And then they hopped onto the GLP-1s. They have proven that as operators, they're rapid to market and they're going to take advantage of anything, any changing legislation, any supply chain issue, right? Where they say, oh, you could sell this online now. They're going to hop in and do it. So they're just going to do it with the next one. They've been doing it for years now. So I think it's tough to bet against a company that operates that way.
I'm going to start making a note of the ads that I get because the only ads that I really get are from my smart TV or from YouTube or whatever. And it's basically like either sports betting or it's Hims or it's like,
that's it. I get Hard Rock bets.
There's probably a few more that I'm not thinking of right now, but it's basically 50% sports betting or Hims. We're right off the bat. Like,
that makes me feel better. I thought, like, as a 36-year-old male, they're just giving me the ED stuff every freaking commercial break. But that's it, dude. It's Hard Rock bets and Hard Mints. Those are the only commercials that we see at my house.
It's pretty. I should do like I'm a big fan of like tracking things, and I like just short term and just to see. And I'm gonna like do a weekly diary. I don't know, not this week, but like I'm gonna just do a diary where I like keep track of all the ads that I get served because it is a lot of Hims and it's a lot of DraftKings, it's a lot of FanDuel. Right?
I'm gonna check what Hims marketing spend is like right after the show.
Probably high.
I am so interested.
Probably extremely high. Okay, let's talk Walmart here. Holy cow, what a banger of a report. I do know that they have given back about half of the gains overnight. Still up about 2%. Last I checked a few moments ago, but they just knocked it out of the park here. The earnings per share that beat 58 cents versus 53 cents. The revenue that beat 169 billion versus 167 billion. U.S. Comp sales that beat ex gas 5.5% up year over year versus 3.8% expectation. The guidance they raised that as well for the EPS. The Sam's Club comp sales grew. The e-commerce blew it out of the park. What was the e-commerce number? The e-commerce grew like 27% globally.
Yeah.
27%. Dear Lord.
And they're all moving on this pre-market.
Now, I do know, I did see the comment. Someone put in the chat. I did see the comment about the tariffs. They are unsurprisingly concerned that tariffs would raise prices. That's what tariffs usually do. So there was a comment about that on the call. I don't know if that's the reason for the weakness this morning or in the last hour or so, but it was a banger, man. I mean, they just crushed it.
They're a machine. The market's good at discounting things like tariffs. Walmart's trading at new all-time highs on the heels of earnings pre-market, and TJ Maxx tomorrow. I'm especially interested in, and BJ's. I just love the BJ story. I really think that they could be like the next Costco. When you think of the market opportunity, they're really not in many regions of the country yet. And I think that there's just a tremendous growth opportunity there for them, as opposed to a company like Costco, which is like $400 billion market cap. They're already everywhere.
Yeah.
Where do you go? How do you grow? from there?
They're not probably probably not everywhere.
There are a lot of places, Spencer. Like if you look at like a Costco footprint map, like they're there, mature company. Okay, what are they going to go to China next? Where's the next growth opportunity for a company?
They're actually in. Speaking
China.
of being everywhere, they're in a lot of. I don't know if you realize how many countries they're in. They're in a lot of countries. I guess that goes. Like that's not the point I was making, but yeah, they are in a lot of.
So what happened?
International. Dude, I'm on like the Costco subreddit, and which is basically 50% pictures of international food courts. Just because I'm just
say I'm on the Costco subreddit.
I am, dude. I own someone with Dawson commented in the stocks that I own. I was about to put a thing in the chat. Costco's one. I only own like 5 stocks, like long term, 4 or 5 stocks. Costco's one of them.
Yeah,
like,
great. It's great.
Yeah,
well.
it's like it's
well
like Costco, Disney, Berkshire, and BlackRock. I think I'm trying to think of the other. Is there another? Oh, and then
it's not
Meta.
a terrible list. Disney's a little questionable, and
I do own Meta, but I've been trying to figure out how to sell it.
Let's play Am I Diversified? You guys ever watch Kramer? You ever watch Mad Money? All right, we're gonna play Am I Diversified with Spencer. They give 5 stocks, and then you tell them if you're diversified. Okay, so go. We got Disney. We got Berkshire. So a little financials, a little discretionary, consumer too.
Well, this is in my like quote unquote like you know in the account that I consider as being like long term positions.
Let's play the game. Yeah, good.
Okay.
Costco, BlackRock, Disney, Berkshire. What's the 5th?
And then Meta, which I bought as a trade, and then it kept going up, and then I never sold it. So
you get a 10 out of 10. You're already diversified with something like Berkshire. BlackRock is just one of these like global superpower type businesses that you have to own, I think. So that's fantastic. Costco as US consumer / retail discretionary, great exposure there. It's basically the best one. And then you have Disney, which I think is a wild card.
Dude,
it's a wild card. I get it. Deep value guy, right? And then the one thing I was going to say is you have no mega growth or big cap tech, and then you throw in the Meta.
Well,
fantastic.
I have the Meta. It was never intended to be a long. It's now been. What has it been now? Like it's been I'm definitely over a year, and it was never intended to be in my portfolio for very long. I bought it. We were talking about it like last fall, and I bought it last October, and I bought it, and then it just kept going up, and I was like, all right, I guess I've got Meta now.
So
I don't know.
So Spencer, we had political headlines today. Market moving headline, some missiles in Ukraine and Russia.
Ukraine?
War on. So do you want to just give us a quick summary of what happened there? Because I have thoughts on this.
You know what? I can't remember the last time I saw like the banners on the breaking news sites and they had Ukraine in them. It's been a while since I've seen like a Ukraine Russia headline being like the headline du jour, right?
This is the first time in a long time that it appears the war has been escalated.
Right. So a couple of things happened. Kenny mentioned it yesterday on the show. The U.S. gave Ukraine some missiles. They said thank you. They fired those missiles into Russia. Russia said not cool. Russia, and then Putin responded by expanding some nuclear
capability.
Nuclear thing that they had. So
Russia said, if you do this, we consider it U.S. attacking Russia. No?
Yeah.
So just to be clear, right? Because we're in this little window of time here where the nation fired one guy and hired another guy. And Trump has been making progress, from what I read in the New York Times. He's been making progress on the Ukraine-Russia peace negotiations. Okay. And Europe is getting on board. All these headlines came out. And then this guy who literally got fired by the country is making a decision to allow Ukraine to send U.S. missiles to Russia and escalate war tensions. Right before
part of me wonders.
Hold on. Why does it take so long to get one guy out and the other guy in? Back in the day when people generally did the right thing, I think it was fine. Too much time in between. The old president's got to go when he gets fired, and the new president's got to come in. This is scary. That a party or even a person would stoop this low.
Part of me thinks this is going to be a repeat of like the Iranian hostage crisis, where like literally the second Reagan was in, they're like, okay, come home. Like, well, it was over like almost immediately, right? It was a lot of it was just to spite Jimmy Carter. So maybe I'm thinking as soon as Trump gets in, it'll be like, okay, tensions, everyone calm down. It's all cool. Like ceasefire. Like,
it's the bigger point here. Acknowledge what's happening. We should be on the same team. But instead, you got one guy who no one believes is even capable to do the job anymore. A lot of people think probably has dementia, escalating war tensions when he's literally a lame duck president and somebody else has the job now. He shouldn't be allowed to do that. We should be on the same team. We should be working together, not the Democrats trying to make it harder for the Republicans. It's one country. Like, what a joke.
Did you see the video of Biden in the Amazon just kind of walking, like wandering away, like into the jungle?
Oh God, dude. Yeah.
He's just walking into the jungle. It really was funny.
I think that's just terrible and really sad. Again, just speaks to the state of American politics. What a shit show.
It actually made me laugh. A lot of this stuff doesn't make me laugh, but that made me laugh. Okay, Walmart. Great report. Open green. Don't know what it's doing right now, but let's take a look. We also had, it's still up 2-3%. We also had I don't know if we have the chart handy, but we had Lowe's this morning, LOW. So let's look at that if we can. We have the chart. Trying to get my numbers up right now.
All the crazy liberals in the chat getting mad.
Why is my Chrome not working? This is irritating. Anyway, Lowe's down 3.5% this morning on their report, and my internet's being slow. There we go. Okay. It was a beat and a raise. So they must have said something on the call, or not, and that's just the market's reaction to it. But wait, that's the wrong. Is that the right chart? No, that's not the right chart. That is that my bad, Font? Did I tell you the wrong lows? I mean, I told you the wrong lows. Sorry, I meant LOW. Oh well. Anyway.
It's big retail week. This is retail week.
Yeah. This is retail week. We should get Jeff Mackey on in the next week or so to talk about this stuff because we have Target. What is Target tonight? I think.
How are they doing? Are they figuring it out?
Dude, I don't know. Target was like they were like the poster child of how hard it was to run a business during COVID. Remember their whole inventory glut problem? They had so much inventory in there, and they couldn't.
Yeah, they did terrible.
Yeah,
it's just bad operators.
Target is tomorrow morning.
What an inverse Head and Shoulders is shaping up here in Target, though. You're seeing the right shoulder for now. It's just as clean as it gets into a gap. That's interesting, but it's not until 180.
Okay, what else?
BJ's and TJ Maxx are really the ones that I'm focused on this week. So I do want to talk about one more retail report. If you're ready, let's talk about Amer Sports. This is such a good story. What a growth story here. Just tremendous.
Remind me, is this just sporting goods?
They own Wilson, which makes footballs, golf balls, balls, all different balls, basketballs. Yeah. They own Louisville Slugger. Okay. And they own a brand called Arc'teryx, which is the new luxury athleisure jacket mostly in Asia. Super hot right now.
Oh, another hot jacket. I've seen this story before.
No, listen. But they're diversified. Unlike something like Canadian Goose or whatever that just sells like $1,000 jacket, these guys sell bats and balls too. So they're a sports holdings conglomerate type of thing, athleisure play, and I think about half of their revenues. I got the stats here. Like half of their revenues come from 56% of their revenues come from Asia, so Asia Pacific and China, and then about 50% of the revenue growth is coming from those divisions or those regions of the world. So it's really an Asia story, like an Asia growth story, which I love because you can get a lot better growth rates out in Asia than you can in our country. So I think it's fantastic. I think it's breaking out to new all-time highs. I think it's another just home run earnings report, and this is one that we've been stalking for a while. I'm long. Full disclosure.
And it was a good report this morning. Well, what's the ticker?
Yeah. AS, Amer Sports. You can throw up the chart.
AS. All right, it's up 2%.
Throw up the chart.
Yeah, beat and a raise. So cool. Nice story. Hey, Sean, congratulations, man. Sean's getting down and dirty this morning in the brand new iBid options.
I think it's fantastic that we can finally trade options on Bitcoin in the equities market.
It only took what, 6 months? I don't know if that's long or not. No idea. Anyway, okay. What else was on my list here? Walmart and Lowe's. We covered Boxed a little bit. BKKT, they're maybe getting acquired.
It doesn't sound like it. It sounds like a no, but they like it anyway. Bitdeer, big Bitcoin miner, bombed earnings just like most Bitcoin miners do, and they're not knocking it down. It's up here, printed like a big funky candle yesterday, a big wide range candle coming out of a sweet coil right at the upper bounds of multi-year all-time high resistance. And I think this one's about to break out. Like when I say missed earnings, okay, they were supposed to report -9 to 10 cents a share, -35 cents, like bombed. They were supposed to report revenues. Not that it matters when your revenue is 77 million a quarter, but they report 62 million, missed by 20%, like absolute bomb. So when a company bombs earnings and still breaks out of like a giant pattern, if we have the Bitdeer chart, Sam, I would love to throw it up right now. When a company misses earnings like that, and then the chart breaks out of a massive base, like the one in Bitdeer, it's the market telling you the earnings just aren't that important. There's some sort of macro factor going on, like, I don't know, the price of Bitcoin absolutely mooning every night while we're sleeping, that's driving the price action in this stock. So I love that. I love the ones that are missing and being rewarded. And honestly, most of these Bitcoin miners are missing.
What was the one? What was I about to say?
Mara did a raise yesterday. They announced, I don't know, senior loan offering, some sort of debt offering. So stock got killed on that. Again, these companies are for trading, not owning. Their cap tables are disgusting. I think half of them probably go to zero. They're terribly mismanaged. The amount of stock comp they're paying.
But how can they go to zero if Bitcoin's going to go up in value?
Well, that's the thing, right? Even the bad ones probably survive if the price of Bitcoin keeps rising. They're actually mining Bitcoin. There should be something there. But there's some big winners and losers. Like if you look, the cores, the Bitdeer looks pretty good. Hut is breaking out of a nice base. I guess Iris Energy has been good. Wolf has been good. Cypher, but then there's other ones like Mara where it's like yesterday the thing was down like 15%. Trust me, it's frustrating. We've been in and out of the calls. We sold the double pretty quickly. The nice thing about the Bitcoin miners is if you pick your spots well and you're trading short dated calls, one day gets you a double. Because when these things go, they're up 20, 30, 40% a day. So we've kind of been doing that, but I think the remainings have been going worthless, at least in Mara. Riot's been a winner. Clean Spark's been a winner.
Hey, SMCI might not get delisted. It's up 25% this morning.
And so aren't they all like related, Spencer? Do you know the situation? Like, isn't Jensen Huang's niece or cousin the CEO of AMD?
Yeah,
who's like
they're distant cousins.
CEO of Supermicro, like they're all, what's going on there?
Taiwan is a hub, just like how like New Jersey is a hub for pharmaceutical talent. Taiwan is a hub for semiconductor talent.
Yeah, thank you. Well, so I guess there might be something in the water with this family because now the AMD chief accounting officer is resigning effective immediately. I don't know, man, what's going on with these semiconductor stocks, but can we throw up the semiconductor momentum thrust chart? Semiconductors relative to software. It's a little cute, but it's fun. And there's a story here. And these are two of the most important stock groupings in the entire market. So we have semiconductors, the most important stocks in the world, versus software, the best stocks in the world. Dude, 3 times. I'm going to keep saying this over and over and over again on these shows. 3 times since July. Since July, this was the worst week since the financial crisis. And then you'd have to even go back to the dot-com bubble.
This is a cool chart. This chart is the AI trade in a nutshell.
Semiconductors are screaming at us that they're done outperforming. And no one wants to believe it because it's the great semiconductor AI fueled bull market. So when you have a narrative line up and be so offsides with a chart or price action that's just screaming at you, ooh, this is a good setup.
This chart is the AI trade because AI is going to, that's what they say, is going to kill software. It's going to kill all the developers' jobs. It's going to make so much software redundant because it's going to be so much better. And yet, here it is, software outperforming.
Software is, for business people, like the greatest gift from God ever. Okay. There's nothing like software. Businesses are incredible. Good luck. Some will be disrupted. Other new ones will emerge. Software stocks look so good right now. So we're talking a lot of shit about large cap tech, mega cap growth. Software still looks fantastic for the most part.
Yeah.
And a lot of this action is being driven by the biggest names. However, it's not just a market cap story, because if you look at semiconductors versus software, XSD versus XSW, equal weight basis, giant top completing, looks like a new trend is taking place that favors software over semiconductors.
Let's acknowledge that tomorrow NVIDIA has earnings. So this thing that can change. This can change theoretically. NVIDIA is that powerful, right?
Yeah.
So
or the trend could continue following the earnings result. Earnings could simply be a catalyst to continue these trends in the direction that we're heading.
Yeah, that too, of course. All right, Pat said he can't join us today. He's busy doing some work. So you want to do some recess and hop out?
Yeah, let's do it.
All right, cool beans. Oh, what the hell? There we go. I just said cool beans. I never say cool beans. Did you? I didn't ask you. Did you watch either of the fights over the weekend?
Yeah, it's sad.
Yeah, wasn't it?
Yeah. Yeah, no, the best part was at the end when they interviewed him. He's so awesome, man. I'm like, what a guy. Like, how can you not love Mike Tyson? They said, Mike, why can't you stop biting your glove? It's strange. It's a really strange habit. And dude, he's so awesome. He goes, I just like to bite things. I have a biting fixation. And the whole world was like, Mike, we know, and we still love you. That was so good.
Yeah, full disclosure, I actually fell asleep before the fight, but it didn't matter because I didn't miss anything.
Well, I did the same thing because I was trying to watch. I wanted to watch those girls because they beat the shit out of each other. These two.
Yeah.
Every time they fight.
I was watching that one, but then I fell asleep, and then
I wanted to watch that. I was more interested in that than the Paul Tyson fight, but I couldn't get in. So they literally crashed Netflix. I think is the biggest takeaway about what happened.
I had no issues. Everyone else did, except for me.
I couldn't get in. People were watching from their cell phone, so I watched the next morning. But I think the big takeaway from the Tyson Paul fight is that Netflix is still a joke when it comes to doing sports well. They can't figure it out. Like, can boxing please go back to HBO? It was great there for decades. Netflix just, how about the commentary? Did you watch like all the, God, terrible. What were any of them talking about? Why was Roy Jones Jr. even there? Like, I don't understand. So
Netflix, reminder for all football fans, Netflix has 2 Christmas NFL games.
Yeah, here we go. It's a terrible viewer experience watching sports on Netflix. I think it's really awful. YouTube TV has done a phenomenal job.
We'll find out. No, that's my only reason. I'm going to the city in a couple hours. I haven't been to Manhattan.
So
I don't even really know last time.
You're going to this conference that they have like every year. It's like in a basement dungeon somewhere in Midtown. Is that the one? What was it, like the New World Center or something? Right?
It's moved around a lot. It's by the Oculus, the World Trade Center. It's not in the basement.
Forum. You go down like 18 floors.
It was in like a basement for a couple years. It's not anymore. Yeah.
All right. Gonna go see your old friends.
And then nobody had cell service, and we realized that was a mistake.
Yeah, that's absolutely right. I met Kenny Glick at one of those, actually.
Yeah. That was no good. Anyway, all right. It's Tuesday. We got Spaces right at 11 o'clock.
Yeah.
And the Flow Show at 1 o'clock. And that's the plan. So we'll see you guys there. Smash the like. Thanks to Herb Greenberg. Any new guests you guys want us to have on the show, email us questions at stockmarketmedia.com. You should follow us on all the socials. If you're
Alex Karp, Brian Armstrong, and Dara K from Uber.
All right.
Michael Sale.
Follow us on the socials, like and subscribe, do all that good stuff, and go make some money. All right.
I'm gonna go stick to stocks.
You stick to stocks.
Happy Tuesday.
I can't take no